The Fear and Greed Index. Now, should you really be using this when trading crypto, or is it all complete nonsense? I do not want you to waste your time and your money experimenting with this one. So what I'm going to do is go in right down into the numbers. Plus, also, we're going to be looking at some alternatives as well to the Fear and Greed Index so that you can get a good, better sense of the market, which direction it's heading in, and you're going to be able to make better quality trading decisions. So everything shared in this video is actually going to be downloadable for you. So I've put it together in a little Excel document that I'm going to be showing with you in this video, and you can get it right here. So just go to the Fear and Greed Quantitative Analysis. You can click there to download. You will need to log in, but the good news is that creating an account here at Mutual Ninja is absolutely free. So let me just show you exactly what you're looking at here. So this here P&L, okay, so these are daily. So every single day here on the date, and this P&L basically shows the difference between yesterday's Fear and Greed Index and what it is today. So you can see obviously it was 30 on the 1st of February 2018, and then on the 2nd of February it's dropped to 15, which is minus 50%. And this just carries on all the way down. And to compare this, what we have over here is the Bitcoin price on that time. So you can see this dropped by 50, and the Bitcoin price also dropped the same day. And then over here where it says Union, this here basically says whether or not they moved in sync in the same direction. So what we could do is we could just kind of eyeball this and just try and guess how in sync it is. But doing that, you know, there is a better way. Now, I hope you can see here that we do have all of the data, every single day's worth of data from this. So like I say, I don't want you just to jump into trying to trade and test this stuff out with real money. The idea is that we do this type of quantitative analysis prior to putting your money on the line, so that this way we can actually back test all of this stuff and make better decisions going forward. So when you get this, if you don't use Excel much, I'll give you a little tip. You can get on here, press either Control or Command on the Mac, and then the down arrow, and that'll take you all the way down to the bottom of the column, all the way down here to 2024, and you can see here that out of the 2,400 data points that we had here, what we've got is only 1,010 where they actually are the same, so that they actually moved in sync in the same direction. Now, this could be a good thing, because what we're looking for really is a leading indicator. So what we have to do now is work out, is this a leading or a lagging indicator? So if we take a look here on this day, you can see that the mood was pretty positive. It went up 5%. However, the market itself, Bitcoin, did go down that day, which led people to maybe sort of second guess their enthusiasm, and it then went down 15%. However, Bitcoin went up, which then confused them, so their sentiment kind of changed and got a bit more positive. But unfortunately, Bitcoin went down, which meant that the index also went down. And then we had another bad day, which led to a very bad day on the index. But then Bitcoin went up. So the people, their sentiment, their enthusiasm went through the roof. It went up 53%, but then Bitcoin went down again. And what you can see from this is clearly that the sentiment, the Fear and Greed Index, is a result of the price action the previous day. So if prices go up, everybody feels great about themselves. The sentiment is really, really high, and everybody gets excited. However, when prices take a bit of a knock and go down, the opposite happens. So what I've done on this next sheet down here at the bottom is the adjusted Fear and Greed Index, and I've adjusted it by just basically moving it up by 1 day. So we're looking at the 2nd of February's Fear and Greed and comparing it against the 1st day, so that we're now testing that theory to see if it works. So if I go all the way down to the bottom, what we got now is 62% accurate, so much better than the, I believe it was 42% on the previous one. There we go, 42% or 62%. So we've gone up 20% in accuracy, which, to be honest, is still not that great. Okay, so you're not really going to make a lot of money on that. It's basically a bit better odds than a coin toss at this stage. However, what you can do, what is quite interesting, is if I scroll up through here, you can see the bits where the color changes. So this is the index, and whenever it goes over 85 or below 15, I've got a little marker right here. So here we go. So this is where it's gone up over 85. So we've got a little red marker, and that's just really a little warning to say maybe you should think about selling, or you should think about buying. So right here, the price was 68,000, and down here at this marker, the price was 73,000. And it's just a little slap in the face, a little wake up call to say, maybe you should look at buying or selling. And that all depends on the bigger fundamental market conditions. It doesn't mean absolutely you should buy or sell. If we scroll up, it doesn't happen all that often. So we've got it over here where it says to buy. And back here, we was in extreme fear. We went down to 9, went down to 8 over here. The price was 29,000. And you can back test this yourself, guys. You can go through these dates, have a look at the prices, and try and work out whether or not this is going to be any use to you whatsoever. Right here, you can see a lot of selling, and this was in 2020. Okay, so this is quite late on in 2020, and the price was only sort of 15 to 16,000, and it's telling you to sell. And if you know anything, you'll know that the following year, the price actually went all the way to 60,000. So it probably wouldn't have done you very good to sell during a major bull market, which is pretty much exactly where we are right now. So every time on this chart where you can see a yellow line, that is the Bitcoin halving point. And obviously what happens after the Bitcoin halving is you get a massive boost in the price of Bitcoin following the next sort of year and a half afterwards. So where we are right now is basically we've just gone past the halving. Yes, things may be bad, but just like back here that we were looking at in 2020, September, October 2020, was that a great time to sell the Bitcoin? The point is that I'm trying to get around here is that you want to take the fear and greed with a bit of a pinch of salt, but definitely if it is in line with your greater fundamental outlook of Bitcoin, of the cryptocurrency market, and it's in line with that, then maybe you should be taking note and taking some action. But I wouldn't do it just purely because of fear and greed. Over in the Discord group, I was chatting away, telling people about things that I'm looking at, like the Fear and Greed Index. And one of the guys, Chris, he got back and he mentioned something that I'd never ever heard of before. So it was the US$Dominance chart. And what he was saying is, what he's heard from other YouTubers and that online here, is that you can use the RSI with the US$Dominance to work out when to get in and get out of crypto. And I thought that sounded like an interesting idea, and maybe we'd download some of the data for that to work out through the quantitative analysis to work out whether or not there's actually any truth in this, and whether or not you can actually use it as a leading indicator for trading Bitcoin and crypto. So down here on the download that you can download just after this video is the US$Dominance and Bitcoin, where we've done exactly the same thing as we did before. So what we want to compare is whether or not these are the same, and then see if we can offset it somehow so that we could say that US dollar was going to be a leading indicator for this. But what I found, I mean, you can just sort of eyeball this again, and what you can see quite clearly is that they are complete opposites. So going all the way down to the bottom here, what we can see is that we've got positive 340 out of a count of over 3,000 data points. So it's only 14% accurate. So let's take a look at it now on TradingView. So this is the US$Dominance here on TradingView. And if we add in the Bitcoin chart just to see how the two compare, what you can see is, just as we could see in the actual raw data, as one goes up, the other goes down, okay, all the way along. So for me personally, I think you could either choose one or the other. If you're trading crypto and you want to know whether or not the market's going up or down, you can either look at the Bitcoin chart or you can look at the USDT.Dominance chart. Now, Bitcoin does make up the majority of the dominance in the market, since all the way back in the beginning, but things did change. Obviously, Ethereum's took a big stake. Most of the alts have taken a big chunk out of Bitcoin. Bitcoin's currently still over 50% of the market cap of all cryptos in the market. But the USDT portion there, you can see, has been rising over the years. And what I found going through this data is that particularly early on, you would see large spikes in these daily amounts here, where it would go up maybe 78% in a day, or like 67, 58% in a day. But as it went on, recognizing those massive spikes as they're just basically pumping more dollars into USDT to increase the circulating supply. Because Tether is, of course, a stable coin, the value of the coin doesn't go up and down. The market cap of the coin increases in line with the circulating supply. The more USDT, the more dollars invested into USDT, the higher the market cap. But that's the only way it changes. And unfortunately, in the numbers, as well as on the chart, it does give sort of artificial data, artificial readings, which as the market cap has been getting larger and larger over the years, it's getting harder to notice when they pump in 500 million USDT in a single day, so it could give some skewed results, which I don't think you can really trust. So now let's get on to the really good stuff that you could well use and get some real use out of in terms of leading indicators in the market. Now, well done for you to actually stay in this long in the video. I know from these video statistics that most people have already left. They leave within the first couple of minutes because these videos can be a bit boring. Statistics and all that type of stuff. People just want to know what coin to buy right now that's going to pump 50 million% by tomorrow. But this is how real money is made in the markets. If you want to know how to actually make real money consistently in crypto, this is the type of thing that you need to be looking into. So the last tab down here is the Nasdaq. So here what I've done is basically done the Nasdaq against the top 500 cryptocurrencies in the market, and done this on a quarterly basis. So just basically to make this a lot quicker to do, I've taken the quarterly values of what I'm calling here the MCN 500, obviously like the S&P 500. I'm comparing that against the year-on-year quarterly data for the Nasdaq. And you can see the correlations right here. I mean, it isn't always absolutely perfect because now crypto does share a lot of similarities to a lot of the stocks on the Nasdaq because they're all technology stocks. And obviously crypto is also a technology of itself. But you can see here now we've got 26 out of 33 positive data points. So for the MCN 500 here, which is the top 500 coins on CoinMarketCap, compared against the Nasdaq, they're going in the same direction 78.79% of the time, with a correlation which isn't really all that good. You see, for a correlation to be highly correlated, you're going to need to be between 0.8 and 1 for what would be considered high correlation. So what I've done next then is I got the results for Bitcoin versus the Nasdaq, and you can see that there is actually higher than the entire crypto market, because you've got a lot of very low market cap coins in crypto which do their own thing an awful lot of the time because they've got very low liquidity. But the one thing between both of these data sets, the Bitcoin one and the crypto one, is they do have low, disappointing correlations. Now, the reason for this low correlation with going in the same direction the majority of the time, 88% of the time they are going in the same direction, but it's to do with the magnitude of the moves. So a lot of times with the Nasdaq, it's going to be fairly small moves in the market, and then Bitcoin is going to be like this. You've got the Nasdaq is up 30%, while Bitcoin's up 82%. The Nasdaq goes up 11%, and the magnitude of the move in Bitcoin is so much more. And that is the only reason why the correlation is so low. Now, if we have a look here at the USDT dominance against Bitcoin that we were just looking at, you can see the correlation is minus 0.86, and that's because they are complete opposites. When one moves, the other one moves in completely the opposite direction, but much more highly correlated in this case, because the numbers on each side that it's moving, the magnitudes of the move, is pretty similar, which is why we've got such a high correlation. But with the Nasdaq, not so much. Now, wouldn't it be interesting to compare then the difference between Bitcoin and that MCN 500, the whole crypto market? Well, I've also done that down here. Again, you can download all of this data for yourself from the website. The link will be down below in the description of the video. And if we go all the way to the bottom to the really good stuff, you can see 28 out of the 33 data points, it's the same, and it's a high correlation, which means that if you are into crypto and you only trade crypto, your entire portfolio is filled full of crypto, it is massively highly correlated and extremely risky, which is why I would definitely suggest getting into other assets. Even if it is stuff which is on the Nasdaq, you can see the Nasdaq isn't highly correlated, so it's going to be better for the risk of your portfolio. Now, that is all obviously outside the scope of this particular video and a big subject all of its own. But the important thing here, scrolling up, is the very fact that in most cases, in most days, Bitcoin does, and in fact the whole cryptocurrency market does go in this same direction as the Nasdaq. Now, the Nasdaq has been around for a very long time. I think it was made in the 70s. The professional traders that work for investment banks have been trading it and using leading indicators to tell them exactly what was going to happen to those technology stocks ahead of time. And there are many, many leading indicators for use on stocks on the Nasdaq. So what I'm telling you here, without really going too deep into it because it would be a humongous video, is that to know what's going on with Bitcoin, all you need to do is find out what the leading indicators are for the Nasdaq, and that's going to give you a pretty good understanding of when to buy and when to sell your crypto. That's it for now. That's it for this video. See you again in the next.